Welcome back. You're watching Buy Now, Sell Now, and it is time for the query segment. And if you've got your queries ready, make sure you tell us your name and how long you'd like to hold the stock. If you bought it, tell us what price you bought it at. The first question I'm taking is coming in from Mr. Muhammad Ilyas, and he's asking for a long-term target on Hindustan Unilever. Mr. Chokalingam, I know you picked Nestle as well as ITC from the FMCG pack. We had a conversation about this just in the start of the show. But if you were to say HUL, would you say that it makes sense to enter these levels, and would you be able to give us a long-term target?
You can consider, if not comfortable with ITC and Nestle, as I mentioned, this comes third because some part of its product depends upon oil derivatives. However, HUL is a stock which has got beaten down most. It is down 30% almost from the peak. So therefore, one can consider and start building up slowly. I would suggest him to buy till March end. And the target is, in a normal market, definitely one can expect 15-20% return on an annual basis in the next 1 year.
This one is coming in from Karthi Ravan, and he's saying that he's holding HDFC Bank at the price of around 1,500 rupees per share. 50 shares of HDFC Bank is what he's holding. He wants to know whether it's good to add or exit on any upside due to the certain uncertainty, due to the current uncertainty, I beg your pardon. Kunal, HDFC Bank, no doubt it's hit its 52-week low in today's trading session. But is it a name that you should stay invested in for the longer term? Doesn't matter these dips that we are seeing in the current bull market?
Well, of course, I'll suggest to hold on to HDFC Bank. I think since you bought at 1500 levels, I understand that the stock has corrected 10% from your entry prices. But then again, as you rightly said, Cheryl, that these are stocks where you should hold on to it from a longer term play, because these stocks can give you, not just strong, I would say, resilience compared to the market volatility. But I think more or less, when the market turns around, when the economy turns around, we've seen HDFC Bank to be one of the stronger performers from the banking names from a long-term play. So you have to stay invested into it. Don't look at it as just a 1 month, 2 month trade into these stocks, because you will get disappointed if you look at it from very short-term play. If you're in from a longer-term play, then I would definitely suggest to hold on.
Okay. Cheryl, as well as Kunal and Mr. Chokalingam, I have often believed that the true worth or the testament of a show and the worth of a show is that your own people find it useful. So we've got a question in-house by the producer of this show from Shawani, and she's asking Mr. Chokalingam about stocks from the Tata Group. She says that she's a new person to the stock market. She's entering for the first time, and she's looking for something that is relatively safer. Would you suggest that you can enter into a couple of stocks in the Tata Group, or what other stocks would you suggest she can go for?
Yeah, she herself used the word safe. The best stock in Tata Group from a safety point of view, TCS. We have done an analysis of, the comparative analysis of employee attrition and the cost of employees in the total sales. TCS scores the best. Attrition is the lowest, and it spends maximum as a percentage of sales on employees, which assures in going forward also that the employee attrition could be minimal for TCS. And second, the timing is also suitable for IT stock because it doesn't get impacted by this war, no material input. On the other hand, as rupee weakens, the TCS would be a beneficiary. So therefore, TCS is the best stock, maybe followed by one can consider Tata Investments. So it's a proxy for entire Tata Group. So that stock also corrected. And these are the two stocks I would suggest.
Wants to know about Axona Noble, Kunal. He wants to know whether it's a good time to invest in Axona Noble. He's saying that it is undervalued compared to his peers. So do you think that it is right time to go ahead and buy Axona Noble? We know what is happening with the paint companies owing to what is happening in the crude market, the sharp rally in the crude prices. It's not too good for the paint companies. Asian Paints today down once again. But Axona Noble, do you think it's right time to buy?
Well, I would suggest that if you're looking to buy paint stocks and take that high risk, then why not go for the leader in the pack in that sense, Asian Paints, or maybe the second-hand performer in terms of Berger Paints, because these stocks have done exceptionally well as well from long-term play. The only reason why I'm a bit iffy on Axona Noble is purely on the charts and because of the low volumes the stock exhibits. So I think today also I think the volumes for the stock is about some 1,000-1,500 shares for itself. And given the kind of volatility in the markets, you would not want to stay invested into a low liquid name. So purely on the basis of liquidity, I would suggest that you could probably look at better options from the play. Of course, those are very high beta names. And given the context of the current scenario, news flow, events, crude oil prices, the spike which you've seen, it's possible that these stocks can see a short-term impact. But if you're in from a longer-term play, and if you're looking to value buy, you can start buying at in tranches at current levels.
Okay, the question is coming in from Neha. She's writing in from Kolkata and she's asking Kunal about Alqaeda Mines. She's bought at levels of 2,850 and she's got a time horizon of less than 1 year and she's wondering whether to hold on to this trade.
It's a good price that you've bought because you've not bought at the higher end of the price of 4,000, 4,200. Now, specifically if your time frame is short term, I would suggest that you can stay invested into Alqaeda Mines. I think if I'm not wrong, just about last week or so, when the stock had hit this 2,800, 2,850 mark again, the indicators had come back into oversold territories. MACD, RSI, they're showing some minor strength, I would say, in the last, given the context of the last 1 week of chart pattern and how it has shaped up. So if the stock stabilizes, doesn't break that 2,800 support level over the next couple of days, then you can expect a decent bounce back. And that bounce back could probably take the stock back towards 3,100, 3,200 kind of a zone. So I would suggest a hold on the stock. 2,800 on closing basis could be a stop loss which you can monitor.
Vivek Gowda, and he wants to talk about textile companies. He already has holding in Arvind as well as Trident. He's purchased 35 shares of Arvind at the price of 134 rupees per share and about 85 shares of Trident at 55 rupees per share. He wants to know for the long term, does it make sense to hold on to these counters? Minimum 2 to 3 years is the time frame. What's your take on this one, Mr. Chokalingam? Textile plays, Arvind and Trident.
One can hold considering the product profile for long term and also the recent price correction. But Trident, I would suggest sell Trident and wait for any significant correction to buy them back for a long term perspective.
Okay, the next one is for you, Mr. Chokalingam. He's Shravan, who's writing in, and he's asking about chemical stocks. He says that he's bought Pidilite, he's bought Alqaeda Mines, and he's bought SRF. And he's wondering whether to add more into these counters in the current context. What should he do?
Suggest hold on SRF, but if he's not losing other two chemical stocks, he can sell actually, because most chemical stocks have indirectly or directly the exposure to oil derivatives, and secondly, even otherwise, non-oil derivative input prices also gone up like anything in the December quarter, and there is no moderation in the January quarter also. So therefore, I would suggest hold on SRF and sell other two stocks.
Is coming in from Joy Sheila Prema and wants to buy Bosch, but what would be the entry price for it? Kunal, what's your take on Bosch? We know what's gonna happen, what's exactly happening with the auto companies and auto components. Good time to look at Bosch, and what sort of an entry price can one look at?
See, again, I would say probably that it boils down to the construct of the overall portfolio. Now, if you're looking to buy the auto stocks per se, then of course you have to give more prominence towards the auto names. And I'm talking of the likes of, I think, Maruti and M&M. And these are stocks which are now available at very throwaway kind of levels for themselves and very attractive prices, frankly. So I believe that from an auto pack, those would be the preferred names. But if you're already invested there and looking to add on to auto anch space, then I think Bosch at current levels, sub 15,000, I think also looks very attractive. It's corrected quite decently from 18,500, 19,000 levels for itself in the last, I think, 5 to 7 months for itself. So I think, again, very good attractive prices. But as I said, that the portfolio mix has to be quite balanced. You have to first be more skewed towards the auto stocks, predominantly the large cap names, And then if you've already exhausted the space there, then you can look at auto ink space, and something like Bosch can also be very attractive at current prices.
Okay. Kunal, the next one's for you. Vijayan from Chennai is asking an interesting question. He's got TCS, which he bought at levels of 3,775. From this point, he's not got a very long-term horizon. So he's thinking of tendering shares in the buyback. He's wondering if half of his quantum is accepted in the buyback. What should he do with the rest of it? Should he sell in the open market?
You should definitely look to hold on to TCS. And we've seen this pattern for TCS. Now, I don't know whether it's going to be true this time as well or not, but we've seen that whenever TCS has announced buyback historically in the last 3 to 4 years, the stock has over time managed to exceed the buyback price as well. So I think if we try and extrapolate such a similar behavior for TCS, we could be looking at the stock doing exceptionally well. There are also a lot of other benefits which you have to look at. As I think Mr. Chokalingam also alluded towards, rupee depreciating towards 76 levels and below that. You have the defensive nature from the IT pack. These stocks have already gone through their correction in the last 2-3 months, and they were one of the top performing sectors in the last, I think, 5 to 6 quarters from the pandemic lows. So given that context, I think TCS should be a part of your portfolio. And if you are trending, if you're looking at holding on to the remaining balance of your stocks from the portfolio, then I believe you could probably look at a target potential near term wise 3,800, 3,850 over the near term.
This one is from Sri Ranga and wants guidance on Vedanta, saying that has 500 shares at the price of 203 rupees per share. He wants to know, can he accumulate further for the longer term? What's your take, Mr. Chokalingam? Vedanta for the longer term, do you think it makes sense to accumulate right now?
He can accumulate, not for longer term, for short to medium term, because I would suggest in my career that you would never have a beyond a 3-year view, or for that matter even beyond 2-year view on commodity stocks. Once in 3 years it always becomes cyclical. So never have a buy and hold for very, very long term in any commodity stocks. But short to medium term, Vedanta looks too good because it has got oil business, which is going to be a beneficiary of oil price jump. And also the aluminum segment is doing extremely well. And they have been talking of expanding the aluminum capacity as well. So this is a right time to consider adding Vedanta on every decline for short to medium term perspective.
Okay, we've got a question coming in from Sudha, and she's asking this to you, Kunal. On the charts, what are the chances of the Nifty 50 drifting to levels of 15,600? Even the levels that we've seen in the recent past are maybe lower than the levels that we thought we would see, right? So how are they looking on the charts right now?
So I'll probably take a longer answer over here, Alex. So if you can give me more time, there are a lot of factors. See, what happens is when the market gets into a correction phase, it's but natural that the expectations drop down, and we would expect that the Nifty would keep on hitting new lows for themselves. But you have to look out for change of circumstances and changes of data. In the last 2-3 days, I've been pointing out that there has been some changes in data points which have happened. For example, the India VIX had stopped falling from rising from the 33, 32 levels which it had hit last time. The Nifty had hit that 16,200 mark. So just a price to price point comparison. The previous time the Nifty was at 16,200, the India VIX was at 34. Now we are at 28.5, 28.4 on India VIX. That's a very good and comforting factor for the markets. The Nifty futures has come back to premium, which has not been the case earlier. Indicates that long positions are being built up. There has been a huge spike in the open interest in the last 3 days, almost a 50% jump in the open interest on Bank Nifty, and that's a huge quantum given the context. So any round of short covering which happens could lead to a very strong recovery on the upside. So I would suggest that if you're looking out for indices in terms of levels, I believe that there is a higher chance of a bounce back from current levels rather than the index getting into a sell-off mode. Once that bounce back happens, if assuming Nifty comes back towards 16,800 mark, that could be a level where you can look to book out profits and get into a short mode on the index, not at current levels.
All right, so that's the take on the index, but that's for the longer term. But as we speak, we can see some mild recovery come in the markets. Nifty IT index is the one that has actually turned positive, is in the positive territory as we speak. Let me shift focus now and let's talk about Harish's query, and Harish is from Bangalore, saying that he's asking, is it the right time for fresh purchase of Raymond at current market price for the shorter term? He wants technical views about Raymond. Kunal?
I think I recommended this stock almost a week back when it was at 720 approximately, expecting a bounce back. The stock had rallied towards 780 levels, 775, 780, just about till last week or the start of this week. It looks very attractive. Raymond has done exceptionally well. Last 6 months, I think, if I'm not wrong, has been more like a turnaround period for a stock like Raymond. So purely on that aspect, I would suggest that you can look to buy or hold on to your stock. 660, 665 seems to be a good support point. So assuming if the stock corrects another 30-40 rupees, you should look to buy it at those levels or look to average at those levels.
Okay, gentlemen, it's time to hit the rapid fire segment, and you know what this means. We'll send as many questions as we can your way. Please do answer as quickly as possible. The first one's for you, Kunal. Ruchi Soya bought at levels of 832. We've got a viewer, Puneet, who's asking whether he can keep a short-term target at 900.
I would suggest an exit on the stock.
Okay, Steve is asking a safe price for Infosys. I'm unsure what he means by safe price, with Kunal. Entry target and stop loss for Infosys?
I think at current level, 1700 should be a good point where you can look to enter Infosys. Short term wise, you can look out for 1800 as the target. To stop loss 62.
Mr. Choklingam, Jubilant Farmova, this is a question coming in from Sunil, and he's bought at levels of 492 for the long term. Should he hold on?
Yeah, you can hold on. Bid under a lot. Evaluation comfort is emerging.
All right, this one is from Jacob. He wants a target for sale. He already has 13,000 shares of sale, which is purchased at 106.5 rupees per share. Kunal?
Well, I would suggest that you should try and look to book out profits over here. If not profits, at least an exit over here, partial exit, because my sense is that the commodity stocks can get into a small correction for themselves in the next 2 days.
Okay, the next question is is from Dr. Abhay from Kerala, and he's looking for a view on Amara Raja batteries. This one's for you, Kunal. Would you suggest holding on at levels of 740?
I would suggest that it's better that if you can sell the stock and buy it back again. If the stock crosses about that 600 mark, 600 could be a big breakout point for Amara Raja batteries. Till the time the stock trades below 600, the view would be negative.
From ML Money, Mars Financial Services bought at 716 rupees per share. Should I hold or book loss? Looking to hold for the next 1 year if the hold is the recommendation. What's your take, Mr. Chokalingam?
Sorry, Mr. Stock name.
Services, MAS Financial Services.
Most of these financial services company, I would suggest sell only. I am not comfortable with the valuations.
Question on Asian Paints. Bikash has 30 shares at levels of 2900. Should he add more now? Mr. Chokalingam.
I would not suggest adding. It's a leader. If he is having a 3 to 5 year view, still he can wait. Because of input cost and also Grasim and JSW Group entering, it's a big negative for Asian Paints.
All right, and with that, we come to the end of the rapid fire. Thank you so much, Kunal, as well as Mr. Chokalingam, for joining us on the show, talking about FMCG sector in detail, as well as resolving viewer queries. And viewers, we will be back on Monday, so we will catch you live on all of our social media platforms, as well as live on TV. So do post in your queries then. And with that, we'll slip into a break on this edition of Buy Now, Sell Now. Stay tuned, more on the other side. Don't go anywhere.